What's going on, guys? Quick little video for you gold members, just to kind of give you some insights on some things you should be looking for. So obviously we did have the gap down. I want to kind of show you guys where we stopped. We stopped at this 285 very quickly. Why did we kind of stop there? If we look at the weekly time frame here, you can see this very big level of demand. The 150-day simple moving average on the weekly time frame, guys, this is going to act as a level of support. Now, if and when the triple Qs do start losing the 150 days on the weekly time frame, we got a lot of room down. 276 would be the next stop, and then from there 260. So we could be looking at a little bit of a dead cat bounce. The market tried to do that to kind of start the day. Let's go back into the 5-minute time frame here and kind of see what's going on intraday. So we got the gap down. You can see we lost that, like I said, from the weekly time frame, that 150-day simple moving average, and then we quickly reclaimed it. So on the 5-minute chart, we had the linear regression channel 50 support zone down here. You can see these channels, these blue lines that I'm kind of highlighting. These are channels that we can kind of play in between. Anytime we get to the bottom, we can try to bounce those back into the upper range here, and then when we lose them, we can try to short those, and vice versa, blah blah blah. Right? Look at the bounce that we had here, came right into the linear regression, came all the way back down here, got a nice bounce on this one, and now we've lost it here. So one thing that I do want you guys to kind of keep in mind: can you be playing long in a bear market? Yes, but you need to take profits a lot sooner. So when we get this initial washout, and I can't emphasize enough, especially if you're a newer trader and especially newer to options, guys, just leave the first 15 to 25 minutes of the market. Just leave it alone. Don't chase anything off the open. There's no reason to get FOMO. You're not going to miss anything. And if you do miss a trade, oh well. Okay, there's plenty more trades. With that being said, we did get that bounce here. The next setup, you guys know I like to play the 20. We got the bounce. We got a little bit of a pullback into the 20 period moving average. This was the first play indicator that is telling me to get long. I could have gotten long on the triple Qs at 288, and this ran all the way up to 295. Guys, that's a hell of a trade here. That's a type of trade you take 5 contracts, you're done for the day. Hell, you take 2 contracts, you're done for the day, right? No need to even sit in front of the computer screen and look at all this madness going on. One thing that I do want to make a point on now, where we're at currently, 10:30 a.m. Pacific Standard Time. So we put in this gap down. We had our aggressive bounce. Here's our high. Okay, there's our high. We got rejected. We came back down, and then we bounced. Okay, so anytime you get a big run up, always look for the pullback 50% of the move, right? And this is not something that's exactly to the T, but just kind of keep in mind, like for me, I'm a very visual person. I'm not going to get too crazy in the numbers, but if I kind of look at this bottom down here and this top up here, and I just don't even look at none of this other crap, right? I don't even look at none of this other crap because it's not even out yet. What I kind of do is I say, what's 50% of this upward bounce? If I could just eyeball it, I'd say somewhere in here. Okay, so somewhere in there, we pulled all the way back here. We quickly lost that. So what I would be telling myself is, if we reclaim that, potentially, this is going to be an area, or we're going to get rejected. So we flushed, we bounced, and if we can't reclaim more than 50% on the flush, so what I'm trying to, let me back up here and let me make this very clear. Okay, here's our bottom. Here's our bounce, right? Here's our back test. Now, am I thinking short here? Probably not, because if this is about 50% of the move, I need it to really build below and start testing the lows before I think about going short, okay? Now, back test, here's a bounce. Am I thinking to go long somewhere in this region? No. I can't think to go long until we reclaim at least 50% of this back test, okay? So if I look at this back test, did this bounce more than 50% of the move? No. So I can't think about going long. So all we're doing here is we put in a nice little dead cat bounce this morning. Here's our lower high. Here's our second flush. If we never take out these previous lows and we bounce, look for a rejection spot around let's see what price this is. Look for a rejection spot around 291. Okay, that's what it looks like. 291. Look for rejection, and then look for a flush. That next flush should get us down into 285. That's scenario 1. Here's scenario 2. We hold this previous low, right? Going back to here, we hold this previous low. We bounce, okay? Do I want to get long here? No. I don't want to get long until we take out the highs of this previous bounce. So if this was a washout and this was the first bounce, this is our second leg down. I don't want to get long until we take out this area here. Then I'm looking to take profits at the prior rejection spot, and I'm looking to hold a runner going forward. I know that's a lot of information to comprehend, and a lot of this stuff will make a lot more sense once you guys have a lot more screen time in front of you, but it's just, you know, from seeing the way that things play out from a bigger picture and not looking at every single candlestick. If you're looking at every single candlestick, you're like, okay, red, 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 okay, red, let me short here. Boom, it bounces on you. And you're like, why did it bounce on me? I don't get it. It looks like we were coming back down, but it really doesn't. Not yet. I can't get into a short position until we lose these lows. Now, if we lose these lows, I can take this short position with an idea to take profits at 285 or 283. Okay. If I do take this short position and it flushes and then reclaims, I need to get out of the trade here when it gets back over. So just to kind of keep things into perspective for you and give you guys a little bit of a macro picture. But again, guys, gap down, bounce. Here's our high, back test, bounce. Here's our lower high, back test. And if we bounce and we get rejected somewhere here, look for another leg down, okay? That's the way the chart pattern is going to work. The downwards action is not going to be invalidated until we get over this previous bounce spot rejection. Hope that makes sense.